The retail apocalypse continues to reshape America's shopping landscape, and today we're diving deep into the 15 major big box retailers that are closing their doors across the nation. This isn't just another story about stores shutting down. It's a reflection of how dramatically our shopping habits have changed and what it means for thousands of workers and communities nationwide. Let's start with Macy's, which recently announced its most aggressive store closure plan to date. The iconic department store chain is shuttering 150 locations through 2026, representing about 30% of their total footprint. This isn't just a simple downsizing, it's part of what they're calling their bold new chapter strategy. The reality is that Macy's has been struggling with declining foot traffic and increasing competition from online retailers. These closures will affect approximately 2,000 employees, but the company claims this move will help them focus on their most profitable locations and digital presence. Next up is Walmart, which might surprise many given their usual stability. While they're not facing a crisis, they're strategically closing underperforming stores in 2025. About 20 locations across 12 states are scheduled to close, primarily in areas where they have multiple stores within close proximity. The interesting part is that Walmart is simultaneously investing billions in new store concepts and digital infrastructure, showing that this isn't about retreat, but rather strategic repositioning. CVS is making even more dramatic moves, with plans to close 900 stores by the end of 2025. That's about 10% of their total locations. The pharmacy giant is responding to changing healthcare needs and the rise of digital prescriptions. They're focusing on creating what they call health destination stores, which offer more medical services and less retail space. This transformation reflects a broader trend of pharmacies becoming healthcare providers rather than just retail outlets. Bed Bath & Beyond's story is particularly dramatic. After filing for bankruptcy in 2024, they're closing all remaining stores. This once mighty home goods retailer, which had over 1,500 stores at its peak, couldn't survive the perfect storm of pandemic disruptions, changing consumer preferences, and mounting debt. The brand name has been purchased by Overstock.com, which plans to operate it as an online-only retailer. Tuesday morning, another casualty of changing retail patterns is closing all 200 of its remaining stores. This off-price retailer, which specialized in home decor and seasonal items, failed to recover from its 2020 bankruptcy and couldn't compete with larger discount chains and online retailers. Their closure marks the end of a 50-year retail journey that began in Dallas, Texas. Big Lots is next on our list, with plans to close 150 stores in 2025. The discount retailer has been struggling with inventory management and changing consumer preferences. They're focusing on their best-performing locations and trying to improve their online presence. But the challenge of competing with dollar stores and online retailers has proven difficult. JCPenney, despite emerging from bankruptcy in 2020, continues to shrink its footprint. They're closing 50 more stores this year, bringing their total store count down to about 500, a far cry from the 1,100 stores they operated in 2015. The company is trying to reinvent itself with a focus on beauty products and home goods, but the transformation has been challenging. Party City, which filed for bankruptcy in 2024, is closing 100 stores nationwide. The party supply retailer has been hit hard by changing celebration habits post-pandemic and competition from online retailers and dollar stores. They're trying to maintain a presence in key markets while reducing their overall footprint. Gap and Banana Republic are also making significant cuts, with parent company Gap Inc. announcing the closure of 350 stores across both brands by early 2025. These closures are part of a larger strategy to shift focus to online sales and their more successful Old Navy and Athleta brands. Dollar General, despite its usual growth trajectory, is slowing expansion and closing underperforming stores. They're planning to close about 1,000 stores while opening only 800 new ones in 2025, marking a rare net reduction in their store count. This comes as they face increased scrutiny over store conditions and safety concerns. Foot Locker is reducing its retail footprint by closing 400 underperforming stores by 2026. They're focusing on creating what they call power stores that offer more experiential shopping and better integration with their digital platforms. This represents about 10% of their total store count. Five Below, while still growing overall, is closing 30 stores in early 2025 as part of a location optimization strategy. They're simultaneously opening new stores in more profitable areas, showing that even successful retailers need to be strategic about their physical presence. Office Depot continues its gradual decline, with plans to close 300 stores over the next 2 years. The office supply retailer is shifting focus to business services and online sales as traditional retail sales of office supplies continue to decline. Rite Aid, after filing for bankruptcy in late 2024, is closing 500 stores nationwide. The pharmacy chain has been struggling with debt and competition from larger rivals like CVS and Walgreens. They're trying to maintain presence in key markets while reducing overall costs. Finally, Best Buy is closing 50 stores in 2025 as part of their shift toward a more digital-focused strategy. They're creating smaller format stores and investing in their online platform while reducing their big box footprint. This wave of closures reflects several key trends in retail: the continued growth of e-commerce, changing consumer preferences, and the need for retailers to be more efficient with their physical presence. Many of these companies aren't just closing stores. They're transforming their business models to survive in a digital-first world. The impact of these closures extends beyond the retailers themselves. Shopping centers and malls are struggling to fill large vacant spaces, and thousands of retail workers are facing unemployment. However, some see opportunity in this transformation. Many closed stores are being repurposed into distribution centers, healthcare facilities, or entertainment venues. For consumers, these changes mean fewer physical shopping options, but potentially better digital experiences and more specialized store concepts. The future of retail isn't about the death of physical stores, but rather about finding the right balance between digital and physical presence. As we look ahead, it's clear that this retail transformation isn't over. More closures are likely as retailers continue to adapt to changing consumer behaviors and economic conditions. The key for survival will be flexibility, innovation, and the ability to meet customers where they want to shop, whether that's online or in stores. What's your experience with these store closures? Have they affected your shopping habits? Share your thoughts in the comments below, and don't forget to subscribe for more updates on the changing retail landscape.